All this week, as you know, we've been rolling out our traders' ultimate portfolios, a basket of 5 stocks they think are set to outperform in the months ahead. Today, we're focused on Jim and Sarat. Jim, you're up first with 5 stocks you've talked about on a number of occasions. These are your best 5. Go through them.
Yeah, sure, I will. But let me give you the theme first. I mean, everybody's going to expect this, right? I'm a value investor. I'm sticking to my knitting. I'm noting that there are a lot of people, I'm starting to hear this more and more, that people say, don't worry about the price you pay, just buy earnings growth. And, you know, as that gets louder, that just seems reminiscent to me of tops that we've had before. I don't think we're near a top. I'm just saying it's reminiscent. So I think value will have its day, and that's reflected in the fact that the sectors are represented in this portfolio are old line technology, which as a sub-theme, I will say there's plenty of opportunity out there. I've expressed this in Cisco Systems. We've talked about that a lot on the desk. I think that's in year 2 or 3 of a 5-year chart that will look after 3 more years like Microsoft does today. Qualcomm, very much a story stock, meaning you're waiting for certain things to happen, notably a settlement with Apple, which should come sometime in the next few months. Look, people may say that's a zero-sum game. You're going to give up something from Apple and gain it in Qualcomm. But remember, Qualcomm's 1/10 of the market cap of Apple. So any dollar of transfer matters 10 times more to Qualcomm. Anyway, it's a story stock. Then the other 2 sectors that you see represented here, retail in Starbucks, and a beaten down name that is starting to get some traction back. And then industrials, Greenbrier, a rail car manufacturer that's just doing fabulously and has cleaned up its balance sheet so it has no debt. Finally, Citigroup. Okay, again, going back to the top of what I said, I'm a value investor. Where is the value? It's in financials. This has been held back by a low 10-year, which I think is going to start to rise from here.
Good stuff. Thank you for that.
You're welcome.
Sarat, it's your turn. And you have a financial in there as well.
I got
JP Morgan.
First Republic.
Yep. I didn't get to the second page yet.
Okay.
First Republic and JP Morgan. You've got Delta. We know about your airline exposure. General Motors, you like Jim have that at least in your portfolios, but Jim doesn't have it in his ultimate. Right. And Disney.
Yeah. So Disney's a new one. We started adding to it a couple months ago. Disney's a transformation company. Fox is the new acquisition. ESPN is turning around. Valuation today is 15 times earnings. And the CEO is going to stick around for a couple of years.
So these aren't just recommendations, forgive me. These are all stocks that you own.
We own these, and we're buying these.
Skin in the game.
Skin in the game. And I own all of these personally as well.
Okay.
So Disney's one that we like there. GM, we've banged, talked about forever, 5.5 times earnings. This stock will work when people are convinced the cycle is coming to the end, which I think it is, but you get the 4% dividend at 5.5 times earnings. Delta, trading at 9 times earnings. We've seen what's going on with all the airlines now. They're all raising prices. They're doing add-ons. Delta is the best run out of all these teams, and they have a 2% dividend. So I like that as well. And then you go to financials. And I think we've been talking about that for a while, too. You got a really high-quality company as JP Morgan that I think is going to benefit as we get more growth, not just here, but globally. And First Republic, which on a valuation is probably the most expensive of the banks, but they're a regional bank focused really on the GDP growth of lending in our country.
All right.